Hello everyone. Are you living happy now? Welcome aboard our time machine. Same today, just based on the last week. Economic data release. In financial reporting, our analysis through neural algorithms is based on started against the background of global economic adjustment. Study interest rates, inflation, central bank policies, commodity price fluctuations, geopolitical changes in global supply chain issues. Let everyone in the stranging, ever-changing world outperform the competition. Seek good luck and avoid bad luck earlier than others. Let's embark on a thrilling journey. Today we turn the clock back to September. Then time stretched to the present. It's been a roller coaster ride and fixed income markets during this period. Fasten your seatbelt. During this fun-filled journey, we are seeing some changes. In the fixed income market, it's like watching a tango dance with short-term interest rates shallow trading. And long-term interest rates are heading boldly ahead. Interesting, right? We can take the long-term bond price index. Think of the slightly deflated balloon because in the past 2 months he has fallen. But hey, his return on investment is quietly and slowly rising. When people talk about the secrets of inflation or are hinting at a future filled with higher interest rates. Creepy, but exciting. On the other hand, our short-term bonds short-term index. Like a kid in a candy store, their yields have fallen. Does this indicate candy? That is, demand for medium-term securities increases. Didn't Halloween pass very early? Or the central bank is playing the role of compounder? Has it hinted that it will no longer raise interest rates? Yeah, although only time will tell. But our algorithm already predicted the Fed's best strategy at this time. Please watch the video to the end. On the other hand, we can refer to the impact of the yield curve. We can think of the yield curve as a lazy humming. Flatten slightly at once like the market whispers. Hey, the yield curve is flattening. Has the economy slowed down? Or it was the central bank that took tough measures in raising interest rates? Our algorithm has predicted the best strategy for the central bank at this time. Please watch the video to the end. Since inflation is like an annoying party guest that doesn't want to leave as investors begin to demand more patience from them. This drives up long-term investment returns. The central bank is like the DJ at this party. Their interest rate adjustments and the pace of asset purchases largely shapes the current dance of the market. Let us not forget the buzz at the party. GDP growth, employment data, manufacturing data. They are like influencing investors' views on future interest rates and paparazzi's view of the economy as health. As the economic situation deepens, credit risk will be the drama queen at the Oscars. This reflects our changing view in the bond yield soap opera. As central banks act cautiously, suspense surrounding future policies. Interest rate risk is becoming a bit scary, especially for those holding long-term bonds. It's like a game of musical chairs. Adjust the long and short term of the bonds held. This allows you to avoid being caught off guard when the music stops. We should diversify our assets. Think of it as your investment buffer. No matter what the market direction is, a little bit of everything ensures you don't go hungry. We are at the stage, the most important thing to do. The need for active monitoring. Pay close attention to economic development in central bank chat. It's like having a backstage pass. You can't do business. Next, based on the information we have obtained over the past 2 months, explore the wild world of commodity and industry indices. It's like riding a roller coaster. Commodities plummeted. Some industries such as finance and environmental technology are flexing their muscles. Let us start with the big one. We find that due to reduced demand or increased supply, CRB index and the Rogers Commodities Index all fell sharply. Commodity prices are cooling. The Rogers Energy Index plummeted nearly 10 with the Goldman Sachs Energy Index and the decline in the US Amex Oil Index was echoed. This is a hint of the transformation of the energy market, or is the economy playing tricks. This result had been described in our previous videos in agriculture and animal husbandry. The agricultural index maintained a slight decline. But what about the Goldman Sachs Livestock Index? It also dropped nearly 10. We're in the program and found that after the epidemic, people's eating habits have changed. Of course, we are also guessing this may be investor sentiment, shows signs of being grumpy when trading. On the other hand, we also found the energy sector is also in a downturn. Amex and NICE Energy Index. Amex and NICE Energy Indices. Visibility. Perhaps it is the ripples caused by the operation of policy supervision realize corporate social responsibility with industry. The shift towards a greener environment in biotechnology. The NBI and Amex biotech indexes also took a hit. It is also due to market sentiment fluctuations and new product trial results that are not as good as expected. Indeed, the FDA's hotly debated response. Just say rich people are get Christmas gifts, smiling. NICE Financial Index and Nasdaq Bank Index rose respectively. Higher interest rates will line their pockets. The insurance and brokerage industries are outriding a wave of economic recovery and investors cheering. Don't you think so? Yes, that's the answer, despite the energy industry's troubles. However, the Global Alternative Energy Index remains stable. The ET Environmental Technology Index rose. It seems that investors still believe in an environmentally friendly future. Natural Gas Index rose. What an acknowledgement of the lesser evil in the story of natural gas as an energy transition. What an acknowledgement of the lesser evil in the story of natural gas as an energy transition. What is the technique you use to stir the rice that is about to be eaten next? A region's economy has reopened and the central bank shined icons around inflation in technologically advanced hybrid dishes. These factors are reshaping investors' views on commodities and industries. Okay, investors, is this cooking? The plan mix it up. Avoid risks through diversification of commodities and industries. Financial stability can be on your safety net against the madness of commodity markets. And environmental technology is your ticket to the future. So what is the point of this market mix? Commodities fell but financials and green technology advanced. So what did we learn from this crazy journey? The bond market is a bit dramatic. Short-term yields have fallen while long-term yields cushion the truth. This is a complex investment environment that requires some savvy navigation. In summary, to investors, the most important thing is to stay flexible and be prepared to adapt. Think of it like a dance. You need to be light on your feet. Be prepared to swing as economic conditions change. Finish watching this financial series of videos. Everyone should have received Christmas gifts, right? Have you all prepared your own red envelope for the new year? However, as shown in the hexagrams of the Book of Changes, we emphasize all things are born from existence and existence is born from nothingness. Investors should be able to see opportunities in market changes. Turn decay into magic. Discover the potential investment value. As we end this exciting journey, please remember, global stock markets are a dynamic beast. Sometimes a friendly pet, sometimes ferocious wild animals. Just watch our short videos every week. We'll allow you to do so in a short time. Stay informed. The most important is stay invested in understanding the pulse of the global economy. All in all, the current global market conditions are one filled with highs and lows, a complex landscape of opportunities and risks. Subscribe to our channel. Watch our videos every week. Can spend the least amount of time. Keep you informed about wealth information and the improvement of diversified quality of life. And the ability to adapt to prevent increased risk is critical to navigating these volatile financial waters. Whether you are an experienced investor or just starting out, keep an eye out for the premiere of our videos. First play will help you make it easier, smarter decisions. Please remember, knowledge is not just power. It is a powerful tool to enhance your value. Abdominal poetry and gas from China. 富有诗书气自华. If you are intrigued by the subject, I would appreciate it if you could leave a message at the end of this episode and thank all the people involved. If you think today's video is somewhat rewarding, please be sure to mark your likings to make searching for them easier in the future when you want to watch them. I am grateful for your attention. Thanks. Thank you.